Alright folks, let's talk retirement. That magical time when you can finally tell your boss where to stick it, and then spend the rest of your days perfecting your golf swing or knitting sweaters for cats. Sounds idyllic, right? Well, here's the thing. Retirement isn't just about leisurely days and endless rounds of bingo. It's about having the financial freedom to enjoy those things without constantly checking your bank balance. And that, my friends, takes planning. Unfortunately, the days of retiring with a gold watch and a pension that could support a small village are pretty much gone. But fear not, dear viewers, because there are still ways to ensure you're not eating cat food in your twilight years. Let's dive into the wonderful world of pensions and retirement accounts, shall we? Remember those old movies where the grizzled detective retires after 30 years on the force with a full pension? Yeah, those were the good old days. Pensions, my friends, used to be the gold standard of retirement plans. Here's the gist. You work for a company, or the government if you're lucky, for a certain number of years. You and your employer contribute a little something from each paycheck into a big pot of money. Then, when you reach retirement age, bam! You get a guaranteed monthly payment for the rest of your days. It's like a financial safety net, except instead of catching you when you fall, it gently lowers you onto a beach chair with a margarita in hand. Sounds pretty sweet, right? Well, like most good things in life, pensions are becoming increasingly rare. Many companies are phasing them out in favor of, you guessed it, retirement accounts. The 401k, the retirement plan that's as ubiquitous as it is confusing. It's the cornerstone of many Americans' retirement strategies. Yet it often feels like a puzzle wrapped in an enigma. It's like the IKEA bookshelf of retirement savings. You know you need it, but assembling it feels like navigating a labyrinth designed by a sadist. The instructions are there, but somehow, it still feels like you're missing a crucial piece. Essentially, a 401k is a retirement savings account that's sponsored by your employer. It's a way to save for the future while you're still earning a paycheck. You choose how much money you want to contribute from your paycheck, and your employer might even throw in a little something extra, though no guarantees because capitalism. This contribution is often a percentage of your salary, and it can add up over time. The money you contribute grows tax-deferred, meaning you don't pay taxes on it until you withdraw it in retirement. That's the good news. This tax advantage allows your savings to compound more quickly than they would in a taxable account. The not-so-good news, unlike pensions, 401k don't guarantee you a specific amount of money in retirement. Pensions promise a fixed payout, but with a 401k, the onus is on you to make wise investment choices. How much you end up with depends on how well your investments perform. The stock market can be a roller coaster, and your 401k balance will reflect those ups and downs. So, if you're a savvy investor who can smell a bull market from a mile away, a 401k could be your ticket to a lavish retirement. You could be sipping cocktails on a beach, enjoying the fruits of your well-timed investments. But if you're more likely to invest in your buddy's cousin's artisanal pickle business, well, let's just hope Social Security is still a thing when you retire. Diversifying your investments and seeking professional advice can help mitigate these risks. It's crucial to have a plan and regularly review your 401k to ensure it aligns with your retirement goals. Consulting with a financial advisor can provide valuable insights and help you navigate the complexities of retirement planning. Remember, the earlier you start, the more time your money has to grow. Time is one of the most powerful tools in building a robust retirement fund. So, take control of your 401k today and set yourself up for a secure and enjoyable retirement. Now, let's talk about IRAs, or individual retirement accounts, for those of you who don't speak acronym. These accounts are a fantastic way to save for your golden years, especially if you don't have access to a 401k or other employer-sponsored retirement plans. They offer a flexible and accessible way to build your retirement nest egg. IRAs are like the Robin Hood of retirement accounts. They're designed to help the little guy or gal save for retirement, even if they don't have access to a fancy employer-sponsored plan. They level the playing field, giving everyone a chance to secure their financial future. There are two main types of IRAs, traditional and Roth. Each has its own unique benefits and can be chosen based on your current financial situation and future goals. With a traditional IRA, you contribute pre-tax dollars, which means you get a tax break now but pay taxes on the money when you withdraw it in retirement. This can be particularly beneficial if you expect to be in a lower tax bracket when you retire. A Roth IRA, on the other hand, uses after-tax dollars, so you don't get a tax break up front, but your withdrawals in retirement are tax-free. This can be a huge advantage if you expect to be in a higher tax bracket when you retire, or if you want to avoid paying taxes on your investment gains. Think of it like this. A traditional IRA is like getting a discount on a new pair of shoes, while a Roth IRA is like finding a $20 bill in your pocket after you've already bought the shoes. Both scenarios are great, but they offer different kinds of satisfaction and benefits. Both are good, but in different ways. The choice between a traditional and Roth IRA depends on your personal financial situation, your current tax bracket, and your expectations for the future. The catch with IRAs is that they have contribution limits, which are significantly lower than those for 401k. For 2024, the maximum contribution limit for IRAs is $7,000, or $8,000 if you're age 50 or older. In contrast, 401k plans have much higher limits, allowing you to save more if you have access to one. But hey, something is better than nothing, right? Even with the lower contribution limits, IRAs are a powerful tool for building your retirement savings. They offer tax advantages, flexibility, and the potential for significant growth over time. So, whether you choose a traditional or Roth IRA, you're taking a positive step towards securing your financial future. Section 5. Pensions versus 401k, a tale of two retirements. So we've got pensions, which are like that reliable friend who always brings a casserole to a potluck, and 401k, which are more like that unpredictable friend who might bring a six-pack of craft beer, or might show up empty-handed and ask to borrow some money. Pensions offer the comfort of guaranteed income, but they're becoming increasingly rare. 401k give you more control over your investments, but they also come with more risk. It's enough to make you want to crawl under your desk and cry into a stapler. But fear not, dear viewers, there's no need to panic. Just because the retirement landscape is changing, doesn't mean you're doomed to a life of eating ramen noodles and clipping coupons. Section 6. The pros and cons, weighing your options. Let's break it down, shall we? When it comes to planning for your retirement, there are several options to consider, each with its own set of advantages and disadvantages. Understanding these can help you make an informed decision that aligns with your financial goals and lifestyle. Pensions are great if you want predictable income and you trust your employer, and the stock market, to manage your money wisely. They offer a sense of security, knowing that you will receive a steady stream of income during your retirement years. This can be particularly appealing if you prefer a hands-off approach to managing your finances. But they also tie you to a particular employer, which can limit your career flexibility. If you decide to change jobs, you might lose the benefits you've accumulated, or they might not transfer as easily. This lack of flexibility can be a significant drawback if you value the freedom to move between different employers or industries. 401k, on the other hand, give you more control over your investments and allow you to take your retirement savings with you if you switch jobs. This portability can be a huge advantage, especially in today's job market where changing jobs every few years is becoming more common. You can continue to grow your retirement savings without being tied to one employer, but they also require more work on your part, and there's always the risk that your investments could tank. Managing a 401k means you need to be more involved in your investment choices, which can be time-consuming and stressful. You need to stay informed about market trends and be prepared to make adjustments to your portfolio as needed. Ultimately, the best retirement plan for you depends on your individual circumstances, risk tolerance, and how much effort you're willing to put into managing your money. It's important to assess your financial situation, consider your long-term goals, and determine how much risk you're comfortable taking on. Consulting with a financial advisor can also provide valuable insights tailored to your specific needs. It's like choosing between a reliable Toyota Camry and a flashy Tesla Model S. The Camry represents stability and dependability, while the Tesla offers innovation and excitement. Both have their merits, but the right choice depends on your personal preferences and priorities. Both will get you where you need to go, but the journey will be very different. Whether you prefer the steady, predictable path or the dynamic, hands-on approach, the key is to choose the option that best fits your lifestyle and financial goals. Remember, it's your retirement, and the journey should be as enjoyable as the destination. Section 7. So, which one is right for you? The million-dollar question, or more accurately, the several $100,000 question, depending on your retirement goals. Unfortunately, there's no easy answer. Choosing the right retirement plan is like choosing a life partner. It's a big decision, and there's no one-size-fits-all approach. If you're lucky enough to work for an employer that still offers a pension, cherish it like the precious gift it is. But if you're stuck with a 401k, don't despair. There are still ways to make it work for you. The key is to start saving early, contribute as much as you can afford, and choose your investments wisely. And if you're feeling overwhelmed, don't be afraid to seek professional financial advice. After all, you wouldn't perform surgery on yourself, would you? Unless you're a surgeon, in which case, please disregard that last bit. Section 8. The importance of planning for your golden years. Here's the thing about retirement. It might seem like a lifetime away, but it sneaks up on you faster than you think. One minute you're a spry young thing chugging Red Bull and pulling all-nighters, and the next minute you're eligible for a senior discount at Denny's. That's why it's so important to start planning for retirement early, even if it's just setting aside a small amount of money each month. Trust me, your future self will thank you for it. Remember, retirement is not a destination, it's a journey. And, like any good journey, it requires careful planning, a healthy dose of adventure, and a willingness to embrace the unknown. Section 9. Time to get your retirement ducks in a row. So, there you have it, folks. The ins and outs of pensions and retirement accounts, explained in a way that even a toddler could understand, probably. The takeaway? Retirement planning is important, even if it's not as exciting as watching paint dry or listening to your uncle's endless stories about his stamp collection. Now go forth and conquer your retirement planning. And if all else fails, you can always move in with your kids. They'll be thrilled.